Moving on to our top story of the hour. It is all about Snap, and take a look at where shares are trading right now, down more than 30% following its miss on revenue estimates for the third quarter. The social media company citing continued deceleration of revenue growth as a result of ongoing challenges that include platform policy changes, macroeconomic headwinds, and increased competition. Joining us now for a snapshot of the path ahead for Snap, we've got Jason Helfstein, Oppenheimer Managing Director and Head of Internet Research. Jason, this certainly was not a great quarter, but this is a steep fall for this company. Shares are down more than 30%. How much of this you think is overdone?
Look, I think the challenge is investors are kind of asking themselves, do they want to support this company longer term? I think one of the questions we get from investors is, will they ever put ads in messaging? I think it's pretty well known. We all know all of us use messaging products, right? And we generally don't see ads in messaging products. And a lot of this company's use case is as a messaging tool, right? I mean, they do then try to take that activity and get you to spend time using Spotlight and using Discover, but they're also seeing a ton of competition there from TikTok and others. And so when you couple together the 5% decline in U.S. time spent with kind of revenue that was below expectations and kind of monthly trends that investors are having a really hard time deciphering, I think you're having investors trying to decide, do they want to underwrite the company longer term?
Jason, there are two key issues that have really persisted from quarter to quarter this year. One is, of course, the slowdown that we've seen in ad spending to the point you just made. Also, the other one is about this company being able to navigate these changes that have taken part as a result of the privacy guardrails that are now in place through Apple's iOS. I mean, these are not new problems that came up during this quarter. And I wonder if you think we've taken away anything more based on that earnings call yesterday about how much worse things are about to get, particularly for Snap.
Yeah, we think kind of the Apple privacy is a good excuse, but not the main reason. That really only affects, for the most part, app downloads or advertisers trying to drive downloads. The bulk of Snapchat's advertising is brand advertising, and that's what's been bouncing around kind of month to month in kind of an unpredictable way. And they're telling you that they expect their brand advertising to slow as they move through the quarter, right? And so that is the kind of the issue. And then they're also telling you that effectively competition is still a threat to time spent. And so this quarter, you saw impressions slowed, not a ton. They were up 8%, the number of ads sold versus 9% last quarter. But then price spread was down 3 versus up 4 in the second quarter. And they're kind of telling you that they think those metrics will slow, right? Expecting basically flat revenue growth in the back half. And it's not, or the fourth quarter, and it's not all currency. Currency was about 2 points of headwind. So there's definitely, I'd say company-specific factors. Obviously, we'll know more next week when Alphabet and Meta report, but we don't expect kind of as bad of an outlook from Meta because they will be comparing against what was a challenging period last year.
Well, and let's pick up on that point, because when you look at the other social media stocks, they are falling today in tandem with Snap, not to the levels that we're seeing in terms of declines in the Snap stock, but Alphabet, you mentioned Meta, Pinterest, another one that's been coming down as well. We've learned in the last quarter that, this and Snap isn't always a bellwether, partly because these other names are a little more diversified. I mean, what's your expectation when you look at some of these names on the screen? Who's best positioned to ride out the macro headwinds?
Yeah. I mean, to your point, we do think that the whole sector is getting penalized. Obviously, not as bad as Snap is, but kind of down, 4, 5, 6%, depending on the company. We actually do like Meta the best right now for playing digital advertising within large cap in front of the quarter, mostly because they already took their lumps a year ago, right? So they were the most impacted by Apple's privacy changes. They called that a 10 percentage point kind of impact to them. They also benefited the most during the pandemic from the pull forward in e-commerce spending and e-commerce advertising, and that has unwound as we've as the economy is reopened. If you look at the monthly data on retail sales, e-commerce isn't growing any faster than overall retail sales. So that's kind of telling you that there's still kind of like a hangover there. And so we think as that starts to abate and you have easier comps, we think the setup is pretty good for Meta. And then the last thing is we are waiting for Apple to kind of update. It's called SCAD Network 4.0. It's the next technology tool to improve tracking of ads and performance data. And we think Meta is the best positioned company to take advantage of that for their advertisers. So we are optimistic on Meta in front of the quarter.
Okay, we'll be watching for those numbers when they come out next week. Jason Helfstein, Oppenheimer Managing Director and Head of Internet Research. Appreciate the time.
Thank you.